Thanks for joining us today. Welcome to ATI Pro Media. We are live at 9, bringing today's headlines today as they break. Facts, not feelings. We'll see. Got a big week in store. March options came off the books last week. Grain markets leaking a little lower. They continue to leak a little lower here, but bouncing off the overnight lows here out of the gate. Feeders are a little firmer. We're going to jump in and talk about your markets. We got some headlines to run through for you. Cattle on feed. Going to talk a little farm bankruptcy stuff. Ag outlook. We also have crop insurance. The final days of setting this crop insurance price. The weather starting to warm up a little bit. We're out of the cold snap. It's good to get a little sunshine, summertime feeling. 70 degrees today here in my backyard. So my kid was dressed up in, I think, a tank top, shorts, and flip-flops, ready to go to school this morning. I don't know what the heck he's thinking, but power to him. So, all right, let's go dive into your markets here. We'll run down the board, quote you up. Here we go. Look at that sunset there over the weekend on Friday. Great way to end the weekend. Last week, got the cows out there. March corn down 3 3/4 cents, 487.5. March beans down 2 1/4, 1037 1/4. Chicago wheat is down 8 cents, 581 3/4. March KC wheat down 8.5, $6 3/4 cents, testing that $6 level once again. July KC wheat 625 1/4, down 8 1/4. Over at your feeder board, we got March feeders up 72 points, 268.67. Live cattle are up 27 points, 198. April's up 20 points at 194. Looking over at your lean hogs, we got April lean hogs flat to unchanged. May's down 7.5 cents at 91.87. Crude oil is relatively flat, 70 points. Diesel's unchanged as well, 243. Nat gas down 28 cents. Can we finally pull up a nat gas chart? I know we keep promising that, but we never pull it in. It's time to deliver, boys.
Today's the day.
Today's the day. Maybe. We'll see if we can remember. The Dow is up 24 points, 43,000. The S&P down 18. The NASDAQ down 156. Bitcoin, 94,000, down 195 points. And gold's up a little bit. Silver's down a little bit. And the U.S. dollar a little firmer as well here this morning. So, all right, Connor B., come on into the show. Let's break down what we got going on today. How's it going, Connor B? How are you, Monday?
Do it. I'm not in the 50, or you said it was 70 in Kansas. It's like 45, 50, I think, high like 55 all this week. But I'll take it. It feels fantastic. But I left my flip-flops at home.
not flip-flop season quite yet. Leave them in the closet there. But yeah. Now my kid was on the couch getting ready for school. I'm like, that's what you're wearing to school today? He's like, yeah, Dad, it's gonna be 60, 70 degrees. I'm like, well, it's not 60 to 70 right now, kid.
You gotta love the enthusiasm though, right?
Yeah.
Well, hey, we had March options go off the board Friday, and we talked about how the market can do screwy things around that time frame. We saw a little bit of a correction going on a week Friday, and then we continued it today. Is a little bit, are we running out of headlines, Brady, or is it just I don't know what we can look forward to. Got a lot of headlines, a lot of potential threats to this bull market, I think, going into March, right? Acreage is going to be the big thing. And we'll see our first look at acreage with that Ag Outlook form that they have every year. It's the 101st one that I saw.
Okay.
It will be held the end of this week. So we'll see, kind of get an idea where the USDA is, they think they have acreage. Just kind of estimate. To me, I feel like the big one is still that planning intentions report at the end of March. But it'll be good to see where they're at, right? And I think the trade will be paying attention to that number.
Yeah. I think as you look forward here, going forward, what headlines could potentially drive the market? And the Ag Outlook form, how many acres are they going to throw out there? What are they going to print on their balance sheet? And, just the number of potential headlines that could drive this price. And are the bulls getting cold feet here a little bit? Are there more, are we running out of buyers in this market? They got a big long position on corn. What's going to keep driving the market? It just doesn't go up forever, up and away. We may want it to, and it can, I guess, until, I don't know.
It feels like the threat everyone's talking about is how many corn acres can we see? We've seen some big numbers thrown out there, right? We talk about the corn soy ratio and how it's saying it wants more corn acres. The U.S. farmer loves to plant more corn, but are we going to see it coming, right? Usually when we talk about these things months in advance, it's not that simple, right? Just because maybe we think we're going to see a whole lot more corn acres. Doesn't mean that's what the USDA is going to say, especially on their early estimates. But I think that's a big one, right? Is we talked about it Friday, just pulling up a balance sheet and playing with the numbers and how fast we can see that stocks to use carryout number change very quickly with some big acres and a decent yield.
Definitely. Yeah. Balance sheets can change. The numbers can change. We can throw them all at the wall and see what sticks. But at the end of the day, they're going to move around. They're going to change. And you got to be careful how those headlines drive your sentiment, whether it's, just parking yourself in the bull camp or parking yourself in the bear camp. It's, this is a top. It can't go much higher than this. How much higher can we possibly go? I don't know. Rising tide lifts all boats, and things change the game. You got to be, what hurts you in a marketing plan is that unexpected left hook that comes out of nowhere, knocks you down for the count.
Absolutely. And so we did have a commitment of traders report out Friday. We had a cattle on feed report. You want to give us a quick, cattle look at where's fund positions? What cattle on feed report say? Just give us a quick recap.
Yep. Cattle on feed, heavily neutral. I don't know. Placements were disappointing. Neutral. Yeah, I don't know. Maybe placements were light, so that the bulls gave them a little fodder, but the marketings were also light as well. So the on feed number came in very much in line with expectations because of both of those adjustments. So if you put your conspiracy theory hat on, you could say, hey, maybe they're trying to pad that and curb that market down with that placements number being so light. Did we trim that marketings number down just to keep this market in check and under control? Guys got to wonder, but those numbers keeping this market in check here out of the gate. Feeders reacting. I mean, feeders are a little firmer. Fats are relatively unchanged. So your markets are just kind of moving on with things here. We talked about it last week as well. There might be more things going on with the macro market picture on your cattle complex. Watch the consumer. Watch the health of the economy. Watch the beef cutout. The round, the chuck, the rib, the loin, all those primals within that cutout. How are they moving? What's the consumer willing to pay for? And if we can manage that boxed beef price to keep it from just deflating and falling apart on us completely, maybe that packer will keep bidding up on beef. But we got to watch that packer margin. If the packer's not making money, or if he starts to lose more money, that's going to trickle downhill. It certainly feels like, Connor, the feed yard is losing a little bit of leverage, and we're seeing that on the cash price things. Cash price front. Tying this back into funds real quick.
Yeah.
Feeder cattle funds, 30,000 net long on the feeder cattle side of things, 1.7 thousand higher on the week. Look at that red line on the left, Connor.
Unbelievable.
Outlier position on the length there. Good fund length there. Watch out for the overnight sell-off elevator ride down. That's what you got to watch out for if you're a cow-calf guy. If you got stuff you're buying grass cattle, stocking up, you got anything out there, manage your downside price risk on the feeder cattle front. When we look over at fat cattle, seeing the funds lighten up their position on the fat cattle side of things. Typically, they're long on fat cattle. Most of the time, they rarely go short, but they've got a big long position still. While they're off the highs, they sold 7,000 net last week. They're 128,000 net long, but still a sizable long position. Starting to see that slippery slope down and the slide down on the fat cattle long position.
Interesting. Well, cattle on feed report. It was. I don't know if it was nothing new really. Looking at grains, right? We still have a very long position in corn. We're back into areas like 21, 22 when the corn price was, closer to $6, $6.50. Right now, March corn's at 486. So it'd be nice to see if we're gonna have the funds that long. Let's get the price up that high too. But anyway, right. I think the most interesting thing to me is just looking at the fund length in corn versus their more bearish position in wheat. And so this is just taking their net positions in corn versus wheat. And as you can see, bottom right quadrant there, we're kind of in uncharted territory when we're this bullish corn and that bullish wheat, right? Usually they kind of go hand in hand. When we see some pretty good length in the corn market, we're going to see something similar in wheat and vice versa. But that's not really the case, right? And so, right, if we're going to be a wheat bull, we hope it breaks so we could see some buying in wheat, but it's always going to be interesting to see. And so, again, the same fear is when we see the funds very long, we start getting nervous about when they decide to get out, right? And if they decide to get out quickly, how will that look with the price, right? Stair step up, elevator down. But time will tell, right? We got a long way to go, a lot of growing season left. They've got a lot of reasons to be bullish, but time will tell. So I love looking at COT reports. We'll continue watching them.
Yep. Yep. If you're waiting for that signal of the bull market and the bull run is over, newsflash, guys, there ain't gonna be one. There's no sign, there's no signal. They don't put up the bat signal icon and say, "Hey guys, the bull market's over. Now's the time to hedge." That doesn't happen. That magic pill doesn't exist, guys. This thing can bounce back and continue to go higher if we get problems with safrinha corn crop. There's a number of dominoes that could continue to fall.
Absolutely.
But that wheat position is definitely something worth paying attention to and looking at. Just feels like that corn's got a story and is propping all these other markets up, and you need another commodity to get a story to help lift, the rising tide, lift all of these commodities higher. Otherwise, it just feels like there could be some pressure coming on. I want to throw a wheat chart up while we're talking about wheat.
Let's do it. Yeah.
Looking at Chicago wheat here. Look at this, hit that 200-day moving average and just, rejected there on Chicago, which is marked Chicago wheat. So interesting. Trying to hold that 9-day today, but actually broke lower and testing the 20-day. Got the 100-day down there at 570 area. We'll see where this goes. Made a nice little run out of the gutter there, but that 200-day is definitely hitting the market here. So, compared to corn, look at that March corn chart. The 200-day did not stop March corn, but elevated well off that 200. And you have 486 now and 448, which that contract come off the book, so we probably ought to move over to May from a technical aspect. But 448 is where that 200-day moving average is. Be interesting to see if the May contract would want to come down and hit that. Will May hit 200 before expiration? Interesting.
Good stuff. Hey, I think we got it. Do we have a guest in here? Joe, you popping in?
Yeah, I popped in to make sure we bring up the natural gas chart. We talk about it for 3 days. Let's bring it up.
Okay.
Bring it up. Finally.
We needed that. Thank you, Joe.
Thanks, Joe, for popping in. Nice.
All right, Nat Gas. Is this Nat?
This is the Natty Gas chart. Look at that bad boy. And when you get a chart like this, that's just, it just parabolic shot out there. So in January 31st of 25 here, so just a month ago here, down here 298 level on your Nat Gas chart, and rocketed up to 439, 440. Actually went up to was that 450? What is that? The high, trying to find it. 447.5. So almost $1.50 rally here in a month, Connor, on March Nat Gas. Significant.
And
move.
Is that a gap lower today?
I believe so, yeah. Big gap right there.
Interesting. Yep. Following the weather pattern. But
volatile market, worth looking at. A couple parabolic moves last week, middle of the week when we were highlighting it. Just skyrocketing higher and selling off here. I guess now that it's Connor B finally turned his thermostat down after last week. So, good call out, Joe. Thanks for reminding us to bring that graphic up.
Well, hey, last headline. It's not exactly a fun one, but we had it reported that farm bankruptcies increased 55% in 2024. And so percentage-wise, that is an ugly number. We want that number to be 0. But just looking at it on chart form, right, it's more a testament to, how much we healed. We're still a long way from the high we saw in 2019, right? 599. This year was 216. 2023 was 139. And then here, just looking at this state by state, you can see Michigan, Nebraska, Kansas, and then going down to your southern states as well is where we saw the worst of it. But, it's just a testament to where, the price changed. When we go back to 21, 22, right, we saw commodity prices that were much higher, much healthier than we saw right now. And we're not seeing that. And we saw bankruptcies tick up, unfortunately. So, the 55% number, it definitely caught my eye, right? It's still, I think we got to keep it in perspective. We're still much better off than we saw, 5-6 years ago, but still 55% jump year on year.
Yeah, it's not something you want to see, but you always wonder how long a tail does that, for the filing, and bankruptcy doesn't happen overnight, right? It's I don't imagine it does, but you just wonder years stack up and you get yourself in a tough position that you can't get yourself out of, and it seems like that's the last resort type of option that you have to go to at some point in time, and you hate to see it happen. And we had a nasty sell-off last fall. We have had a nice rally out of the bottoms here. Yeah, got to make the most of opportunities and defend your bottom line and risk, and put yourself in a position to, I don't know. It's tough. It's not good to see though, Connor.
Yeah, and a big change that we saw the past couple of years is going to be that cost of borrowing money too, right? They saw, non-real estate farm loans at commercial banks rose 25% from the end of 23 to 24, where interest rates are still at decade high levels from this article. So, yeah, interesting stuff, right? You hate to see it, but it's just a testament to where 2024, right? It's not looking right now with the corn market down, but we've seen a nice rally. But 2024, right, for 10, 11 months, we didn't see that. Right? We saw that weaker commodity prices, and I think that's a big part of it. So,
yeah, it goes to the talking, tying it into the sentiment swing, and you can have a stretch of 6, 7, 8 months where these markets are in the crapper and they suck and they're not fun to talk about and they're not fun to deal with, and you're waiting for that opportunity to come knock where you can go market some crops at better levels. And sometimes it can be staring you at the face and you don't even know it until you fast forward the clock 3, 4, 5 months and look back and say, oh yeah, that was the time. That's when I should have been doing it. And I did some, but did I do enough? Those are things you got to think about here as we enter the spring season and into as we manage 25 crop going forward. What can we do, and how do we position ourselves best for what's to come down the road? And production problems, unfortunately, we try to have good crop insurance, farm bill type programs underneath you to protect your risk from a production standpoint. Because anytime you're dealing with Mother Nature, it's not like a machine broke at the iPhone factory and that caused you to go bankrupt. At times, the weather impacts your production, and you just can't control pieces of the puzzle there. So, you got to protect yourself from what could happen on a production standpoint too. If you're going to go out and heavily market, make sure you're covering your butt so you're not selling $5 corn and watching the basis go crazy on you and put yourself in a bad position when you can't deliver, because we can't protect against that basis. If you lock that basis in and you don't produce the bushels and that basis moves, you got to be careful.
Right. And that's what Farmer Brett's saying. He said, we actually have good grain prices. It's just the base in the area being 2-year lows. Right. And so, yeah, that's a good testament, especially in Kansas. It'd be interesting to see, year on year, 2-year basis changes state by state. But I got to think Kansas has got to be one of the most extreme, right? 2 years ago, we didn't have much of a corn crop in Kansas. We didn't have wheat crop wasn't good either, right? I can't remember 2 years ago.
Yeah, we just get slammed. You guys slam your corn over the top of us when you don't have a market and it ain't going out the river. The Mississippi, Connor B and his customers are loading up on trains and sending it out to Hereford and sending it out to Southwest Kansas. And golly, Connor, shut them trains down. Quit sending that corn over the top of us and you'll help our basis out. It's also a testament to farmers selling and their habits. A lot of farmers, bag grain, bin grain, and they want to get it cleaned up and moved on between now and April. A lot of guys don't want to store that grain past April as they moving on to next crop. And, so are we entering a stretch where we got the lowest basis potential in Western Kansas out here right now? And will things look better after we get, the planters moving in deeper into summer, Brett?
Yeah. Good stuff. Okay. Well,
got anything else? We've been all over the place here.
we covered it all. Only thing, Premium Friday, Premium Friday that we sent out was just looking, comparing post-harvest marketing strategies, some hindsight marketing, right, which is my favorite type of marketing. But in hindsight, what should we have done in 24? Is we should have stuck it in the bin and locked the door. But then also, I wanted to go back to make sure, 23 going into 24, we should have done the exact opposite, right? So I think the overall message is what we're going to be doing is we got to manage the risk, right? However we're doing that. Are we selling grain and getting the call on top of it? Or we stick it in the bin and buying those puts underneath of it, right? And then just making sure we're consistent with what we're doing, because it's amazing, if we saw a nice, we've seen a nice, 80-cent rally in 25. It was almost the exact opposite when I looked at 23 going into 24. So that was the topic, just walking through that, looking at the math of what we should have done maybe.
Yeah, it's good to go review all that, the right decisions and those, not necessarily the right decision, but the choices and how different years, different environments, what's driving our decision making, what tools are we using to make the most of them. It kind of ties into that basis piece. I think what you talked about in that premium as well is what was basis telling you to do, and rewarding that, putting yourself in position to protect that. Good stuff.
Yep, absolutely. So, okay, well, we'll go ahead and wrap it up. I think everyone have a great day. Right, we'll enjoy these nicer temperatures. Right, we're not seeing the frigid negative, and I know I'm going to enjoy it. So, any closing thoughts, Brady?
Nope, sounds good. We'll see you guys tomorrow. Connor B, out of here.